Entries is one of the often asked question which I get where people ask, how do you enter your trade? So in this particular video, I'm going to talk about some of the entry techniques which you can use. Obviously, you cannot talk about entries in isolation. Entries are a subset of your setup. So there is no ideal entry or there is no entry which is universal entry. If your setup is a swing trading setup, then your entry in a swing trading setup has to be at the beginning of the swing. So if a swing is starting, say, let's have a look at this particular case, right? In this particular example, if the swing is starting on this day, your entry has to be on this particular day. That's the best kind of an entry, or that's the most ideal kind of an entry. Now, not only is that, like, so on that day, this is how it will look if you're looking at buying a breakout, right? Now, this same setup can be entered in many other ways. This same setup, if you are trading it not as a breakout method, but if you are trading it as an anticipation because there is a first leg which has been established and there is a consolidation, in that case, this is the anticipation setup or consolidation. This is what you are going to look at. And in that case, you can have an entry which is in a consolidation. When you enter in a consolidation, then you have to wait because sometimes it's not always going to be that you are going to get a breakout next day. So I sometimes enter in consolidation in anticipation of a breakout because it gives you a much better entry than when a breakout happens. I enter on a breakout. Now, when I enter on a breakout, typically most of my entries happen in the first half an hour because most breakouts start out in the first 15, 20, or in the beginning of the day. The entries on stocks like this which break out, if you delay those entries, like if you delayed entering this particular stock, you're going to have 10.97% as a stop. So the more delay you do in entering a setup, the higher is your risk. So trying to enter early is one of the strategies or tactics which I use. So two types of entries. One is like either you enter in a consolidation or you enter on a breakout and whatever threshold you decide as a breakout, right? Now, any entry after that, according to me, for a swing trade is too late. If you're trying to enter this setup next day, it's too late. Because many times on a breakout, the first day moves itself can be the largest day of the move. So trying to get in early can be a much better kind of a entry. Now, here, this kind of swing trades, yeah, again, if you look at this particular stock here on a swing, okay, uh, this is where the swing started because there was a range expansion. So your signal for entry has to take into consideration these kind of things. So this was the start of a swing, right? And there was a range expansion and the stock went in the direction of the range expansion. So that's one kind of an entry, which is like, basically you enter at the beginning of the swing. Now there is another kind of a situation where if you are trading, say, reversals, or you are trading some sort of a pullback, whatever might be the magnitude of those pullback, either a shallow pullback or a deep pullbacks, in that case your entry is going to be happening at the level at which you feel that the pullback is over. So let me give you an example of this again. Example of this can be, say, NFAs, right? In the case of NFAs, if you see on this particular day, right, there was a reversal, or this day there was a reversal, right? And I mean, like those are some of the entries which you can try for a reversal kind of a setup. So here on this particular day there was a minor pullback and from that the stock went to 15%, or this was a much better thing because there was a minor pullback and then there was a signal which told you that this minor pullback is likely to reverse and then the stock went up in this direction, right? So minor pullbacks entries, if you are going to be doing again for a minor pullback kind of an entry, and this is my signal for finding those kind of entries, right? If you are going to be finding those minor pullback kind of an entries, entering on the day of the signal is going to be the best alternative because then if you enter next day, in this case that was a gap up, right? So again, if you're going to be entering reversals kind of things, then you need to be very clear that you need to enter these reversals on the day of the reversal happening. So in terms of tactics, what I try and do is, like, if I'm running a reversal kind of a scan, I run it at around 3 o'clock in the afternoon, and by 3:30, 3:45, you're clear as to this particular thing is a reversal. So in that case, you enter it before the close. As a result, you get a very good entry, and next day if the stock takes off, and that's the idea behind these kind of entries, next day the stock takes off, you can very quickly move your stops to break even or even higher. So that's another kind of an entry. One is like you're looking for a reversal kind of a thing, or a pullback, and you have a pullback entries, or you can have a breakout entries, or you can have a entries in consolidation. And I use a combination of all these kind of things for my own personal trading. Now, in terms of when there is an event, right, and if you have an event kind of a situation, where in this case of NFAs, again, if you look at NFAs, and if you see, uh, this was a earnings day, right, and an earnings was good, and as a result of that, the stock has been going up after earnings, right. In this case, what you have to do is basically, if you enter early, then you need to give it a wider stop, because whenever there is an event kind of a situation or news, there is a, and if the news is surprisingly good or surprisingly bad, the stock is going to be gapping up. So typically, unless you are willing to give it a larger room, you can get stopped out, right? And there are many ways you can enter this, like you can enter this as a opening price or a guarantee OPG or a market on open order. In that case, you'll have to give it a larger room in terms of like how much it is gapping up, and probably if it is gapping up 20%, then you want to give it a room of around half of that. This was gapping up around 9%, so you want to give it a room of around 5%, or half of that, 4.5% as a stop kind of a thing, right? Or um, you can enter after the opening range breakout, which is like once the stock has established the opening range, and after that. But no matter what you try and do, there is no ideal entry. The easier way to trade these kind of earnings kind of setups is to enter throughout the day. So if you have a total position you're going to take, you can like take smaller starting position, then add to it, add to it, add to it. And because I do larger size positions on trades like this, typically what I do is I will do the entry throughout the day, so that way it evens out and you don't really suffer from getting stopped out. But sometimes, and this is very important, especially uh, if the stock is very small in terms of capitalization, this is a 38.8 billion kind of a capitalization, so it's a very well known kind of a stock. But like in stocks which are smaller, right, and in the case of like say GRWZ, which was just a 200 million or some odd kind of a stock at that particular stage, right, it was around 300 million kind of a thing. In those kind of a thing, they are not necessarily going to pull back, they're just going to go on as like a rocket. So if you know that this is a very small capitalization stock, it always makes sense to just use an opening range, not opening range, but an OPG order, which is called an opening price guarantee order in Interactive Broker, or in other brokers it is called as a market on open. In that case, if you put a OPG order, then you are guaranteed the opening print of $9.88 was the opening price for this particular stock. So that's another way of entering a stock. Now, one of the classic problems which I see in many of the people who are new to trading or new to swing trading is that they're buying very late in the move. So if you're buying very late, you're buying a breakout at 3 o'clock, 3:30, 4 o'clock, or like in the next day, you're buying too late into the breakout. The earlier you can identify a breakout and earlier you can enter, then your stop is closer. One, B is like, and you're likely to benefit from the first day's move. And that can be a very profitable move. Sometimes the whole move happens in an entire, like in just one day. Like today, good example of that is Revlon, right? And Revlon showed up in the scan, and the whole move, as far as I'm concerned, was over in a day itself, because it went like crazy, and it made like 60-75% move after the entry itself. So entering early on a breakout is a significant age. Like in this case of Revlon, if you look at it, if you entered early, right, as soon as the breakout was apparent, then you made a lot of money. If you entered very late, you may not make money. And if you entered near the end of the day or something, you may or may not make money in this particular stock. So if you want higher returns and closer stops, earlier entry is a better entry. And this is something which has been studied by Toby Gravel. And Toby Gravel's book is a very good book on entry tactics. And one of the things which Toby Gravel says in his book is that you should basically try and get in early. In the first 10 minutes entry is the most ideal entry. So earlier the entry, better it is basically. Now, the if you're building a position for a longer term kind of a thing and you have some way of knowing that this stock is a good stock, then you can buy in consolidation in anticipation of an entry, or you can enter in anticipation. So those are another good kind of an entry. So typically I use three types of entries. Breakout entry, which I try and get in the first 10 or 15 minutes. I also use anticipation entry or buy in consolidation kind of an entry, where I buy in consolidation itself without waiting for a breakout. That's a very good kind of an entry, because in that case you're not fighting when the breakout happens, and breakouts can be very, very ferocious, right? But in that case, you have to live with the uncertainty that the breakout may not happen next day. So you might have to live with some more time for that kind of a entry. The third is a reversal kind of an entry. Again, reversal is a low risk entry if the reversal works out immediately. And all three kind of entries happen, or all these three types of setups are possible when a stock is making a move, because the stock, when it is making a move, typically can break out, then go and get into a consolidation. So first phase can be a breakout, and then it goes into a consolidation. It offers a consolidation entry. Sometimes instead of consolidation, it has a pullback, and it offers you a pullback entry. So if you use combination of three entry tactics, you can enter many stocks, and try and design your entry strategies to try and capture the first day gain of breakouts, because a lot of gain happens on the first day of gain. And if you're late and if you're buying second day, it's very inefficient. And especially if you're going to be doing swing trading with a second day entry, you might as well not do it.